Welcome back to another episode of Palisade Radio. I'm your host, Karem Mamutlu, and on today's show, we have Dominic Frisby, who's the main commentator on gold, commodities, and currencies for the investment publication Money Week. Welcome to the show, Dominic.
Thanks very much, Grim. Pleasure to be here.
Let's begin by talking about an article you wrote for Money Week in the summer of last year regarding uranium. The article was entitled "The Most Hated Metal in the World is Due a Comeback," where you talk about the bear market in uranium, a new uranium investment vehicle, Yellowcake. What are your thoughts today regarding uranium as the spot price continues to hover around the $28, $29 range?
Well, I'm pleased with the timing of that article because since I wrote it, a lot of the sort of uranium mid-caps have sort of doubled. Laramide is one company I followed. It was trading around 25 cents and it went up to 50 cents. It's now pulled back into the sort of mid to high 30s. And you quoted the title of that article, "The Most Hated Metal in the World." Now, the problem that uranium has, and it's always going to be a problem, is that the public still doesn't trust nuclear power. And whether that fear is misplaced or whether it's justified is an argument that will go on and on. The uranium bulls will tell you that the argument is not justified and that nuclear power is the future and so on and so forth. Whereas maybe other sectors, other people will tell you, no, nuclear, look at Fukushima, look at some of the other nuclear disasters there have been. And, you know, there's a sort of public mistrust of uranium. And until that mistrust goes away, until there is some way that the public is convinced that nuclear power is the way forward, there's always going to be this sort of, I don't even know what the word is, this sort of mistrust lurking beneath uranium. And I don't know what it takes. Maybe it takes an incredibly high oil price. It takes incredibly high electricity prices. Those kind of things. People forget their fears when their money's at stake. So maybe it takes that, or maybe it takes just, you know, some convincing scientific proof. And, you know, lots of it over many years, to the extent that the argument, so that the uranium bulls, the nuclear power brigade, win the argument. But so while I'm bullish on so that's the major problem that uranium has. But at the same time, you know, there was a huge bull market in uranium in 2006. But what we forget about that bull market is it followed maybe 20 or 25 years of bear market. And it was a bubble. And the thing about bubbles is that they often have an underlying story, a narrative that is true. And in the case of uranium back in 2006, it was that nuclear power is the silver bullet that is going to solve the looming energy crisis. And in particular at that time, peak oil was a very strong narrative. The world oil production had peaked and was now in decline. This was before fracking technology had been developed. And then so we got the market got way ahead of itself, to the point at which, you know, there were just companies rebranding themselves as uranium companies, because uranium is a fairly common element. You know, you'll find it in most places in the world. What you won't find it in is in mineable quantities. And so all sorts of companies had land and they said, oh, there's some uranium in this land, and they rebranded themselves as uranium companies, and millions of dollars got raised for companies that never had a chance of building a uranium mine. And I remember having some friends, and I joked that I was going to stake the land on Wandsworth Common, where I was living at the time, and build the Wandsworth Common Uranium Corp. And so, I mean, that's how stupid things had got. And so the other problem that uranium has is when there's a bubble like that, people lose a lot of money. It takes a long time for those kind of bubbles to unwind. And that's what we've been going through in the 10 years since 2007, 2008, or I should say 11 years now. And so I suppose my prognosis going forward is that probably uranium has bottomed, but I think we're still many years from another bubble like the one we saw in 2006. But some sensible investment in uranium companies, good ones, if you take a 5-year view, say, or even a 10-year view, you will make money eventually if, you enter cautiously and don't pay too much. And, we seem to be on a pullback now. I was looking at some charts of Cameco and, it's kind of retesting its highs. I think, what's the price? Around $12 or something like that. And if it gets through, there's a bit of blue sky there for a while. So, I think there's some potential for uranium. But like I say, 2006, we're away from that yet.
Over the last few years, Dominic, you've written a number of articles regarding gold, and especially over the last 5 to 6 years, how gold has been left for dead and ignored within the mainstream financial press. So does 2019 mark a difference in the gold market for you? And what key price levels are important for you to see?
Well, gold's another one. I mean, I'm a gold bug. I love gold. And, I wrote a book, Life After the State, in which I argued that if we were to fix the world, we need to fix our system of money, and gold will have a role to play in that. That was 2011. And, 2011, there was another, maybe bubble's too strong a word, but a sort of mania, maybe a bubble in gold stocks. And again, there were all sorts of gold companies that just don't have mineable deposits, even at $2,000 gold, that were given, $100 million plus valuations. And so there was a speculative mania in gold, and we're still unwinding that now. One problem I think gold has, by the way, just from a technical point of view, I see sort of 1360 to 1370 on the charts as a major technical level of resistance. We're at about 1300 now as we speak. We went up to about 1340, 1350 a couple of weeks ago, and we've pulled back. But 1360, that kind of area, it's been resistance for 4 or 5 years. Gold's gone up there several times, and each time it's got up there, it's pulled back. So if gold can get above 1360 and stay above 1360, then I'll be a lot more bullish. At the moment, it just looks like, what we've had over the last 2 or 3 months is a sort of fairly typical seasonal rally. Here's a major problem that gold has. Gold has been money pretty much throughout the whole of human history. But then again, the horse was human transport pretty much through all of human history. And then along came the car, and now we no longer use the horse. And people could argue, the horse is natural money, and people say gold is natural money, but is gold the horse, if you see what I mean? Is it going to be as outmoded in the future as the horse? Is it that redundant in its role as money? I don't think it is, but it's useful to challenge yourself with that kind of question. What we've seen since the mid to late 90s is there's been a huge transformation in the economy, and it doesn't get talked about very much. But that is that in the mid to late 90s in Europe and slightly earlier in the US, investment in the intangible digital economy exceeded investment in the physical economy. And by the intangible economy, I'm basically talking about the internet and digital assets. And this has become more and more pronounced as time has gone on, to the extent that we see something like, Walmart, the biggest company in the world by revenue, but by market cap, it's dwarfed by Amazon. Google and Facebook have eclipsed, traditional publishing and traditional newspapers in terms of market cap. Even something like Netflix is bigger than Disney in market cap, or it's about the same actually. And the reason for this is that the physical economy has been growing, albeit slowly, but the digital economy just grows at incredible speed. I can design an app and I can upload it to the internet, and I only need to design that app once, and it can be downloaded 1 million or 1 billion times. So there's just a huge scalability with digital technology, and we see it with things like Uber and Netflix. World's biggest taxi company doesn't own a taxi. World's biggest travel company, TripAdvisor, doesn't own a single hotel. Airbnb, world's biggest hotel company or whatever word you want to use doesn't own a single property, or it does own a few, but not for office purposes. And they all have tiny employees. So let's say I'm just, as I talk to you now, I'm looking at my desk and there's a load of pens on my desk. So let's say I invent the world's, fantastic design for a new pen, and 1 million people want to design that pen, want to buy that pen. I've still got to build 1 million copies of those pens. I've got to find the factory that can build 1 million pens and scale up. I've then got to distribute 1 million pens. It's a real headache. That's the physical economy, and it just doesn't exist with the digital economy. And gold is the ultimate physical analog asset. And, we've got this new mindset now. We've got all digital nomads and kids who rent rather than buy, and stuff is a burden. It's not an asset. And, I'd rather hire the Rolls Royce for a weekend than actually have the hassle of owning it. And in this world of where, generation rent, where attitudes to stuff have changed, and even workers now, we're seeing the rise of the freelancer, because people can work from anywhere because they're all participating digitally in the economy. So even the workforce has gone digital. And what is the role of gold, the ultimate analog asset, in this new economy where intangible digital assets are ascribed with a much greater valuation than physical assets? And so that's something I think about quite a lot. And that also makes me doubt the future potential of gold, even though I own a large amount of it. I'm way overweight gold in my portfolio, but that's more for historical reasons and personal reasons than a great desire to make money. Then of course, you look at things like, you look at government debt, you look at the stresses that seem to be looming in the bond market, you look at quantitative easing, suppressed interest rates, this sort of environment which is inherently inflationary, but nobody talks about inflation. There's all these things should be bullish for gold. The rise of political discontent around the world, where's the EU going, discontent here, Brexit, the yellow gilet in France, the rise of parties, extreme parties in Southern Europe, all these things should be bullish for gold, and yet it can't get through 1360. So, I'm not wildly bearish about gold, but I'm not wildly bullish about it for all the reasons I've described.
Okay, some very interesting points there, Dominic. You recently wrote an article on copper where you talked about China and the recent price action for copper, and how the stocks on the London Metal Exchange are near 5-year lows. And to you, that means the setup is perhaps very bullish. So could you talk about this and what you feel the future demand for copper will look like?
Well, again, I think it might have just caught me in a certain frame of mind because it's a Monday morning. But when I wrote that article, I identified the sort of $2.90, $3 area, and I haven't looked at the price in a couple of days. But when I last looked, that the rally that copper was enjoying petered out there. So I think sort of $2.90, $3 is a bit like 1360 in gold. If copper can get above there and stay above there, I'll be bullish about it. But there's a lot of things going on that, like, stocks on the London Metals Exchange are very low, and that tends to be an indicator that there's a bull market in copper coming. And I'm sort of going to declare myself neutral on copper, but the copper's role in electronics, and the same goes for silver. But I mean, silver, crikey, that's the metal that always disappoints. So I'm sort of neutral on copper, but I get that, the stocks are low in China and Chinese imports are up, and there's a lot of fundamental things there that could bode well for copper. But and like I say, I'm long copper. I've invested in copper. I've got a couple of copper companies that I'm probably a little bit overweight in my portfolio, in my mining portfolio. But I like copper. I like the story. There's definitely been a shortage of major copper discoveries over the last few years compared to what's gone on historically. And that again should be bullish for the metal long term. But the problem with metals, going back to what I was saying about digital before, is the time it takes to discover a deposit, to develop it, to raise the money to build a mine, to go through all the permitting, to build a mine, to actually get that mine producing. It's a 5-10 year period, and it's just so long. And by the time the metal actually comes to market, then you've got, well, what was a shortage becomes an oversupply, and it takes almost as long to turn the taps off. So that's why you get these very long cycles in metals. And so I just think we're sort of midway through one of the bear cycles probably in most metals. And we might have to wait until halfway through the 2020s or something before we get the next big bull market. But, copper has had a bit of a rally. So I guess range trade. But call me, Karim, if we get above $3, and I'll be a lot more bullish.
Okay, very good. Let's go through some of the key turning points for you as an investor, Dominic, and some of the successful trades that you've made. I understand you're an early investor in Bitcoin, for example. So what was your investment framework for buying an asset class that was so new?
Well, I didn't buy nearly enough Bitcoins as I should have done. And I guess everyone thinks that. And the mistake I made with Bitcoin is not recognizing its scalability early enough. I remember looking at Bitcoin when it was $1, and then it doubled to $2, and I was like, I'm not buying that. It's doubled. And I was thinking like you think with a junior mining stock, don't buy it after it's doubled. And then it doubled to $4, and then it doubled to $8. And you can't apply that. What I didn't recognize is here is an entirely new money system, which the whole world, 7 billion people, could potentially use if they wanted. And the sheer potential of that compared to here is a mining exploration company that may or may not have found a deposit in Saskatchewan or whatever it is, there isn't the same potential. So that was the mistake I made with Bitcoin, is not recognizing the potential scalability. The other problem that Bitcoin had, it was worse then, but it still has it now, is just that it's still not that easy. The Achilles heel in the whole Bitcoin thing is the point of transference from fiat to Bitcoin. And it's still a little bit geeky and a little bit hard to buy Bitcoins. And, if my mum wanted to buy Bitcoins or something, it's problematic. And so I was a little bit lazy about buying it aggressively at that point. But where I was very proactive and where I was definitely ahead of everyone else is writing about it. I wrote the first book about it, but I didn't invest nearly as much as I should have done. In fact, one of the reasons why I wrote that book is that it had gone up so much. I was like, I couldn't bring myself to buy that much of it because it was kept doubling. But I thought, well, I'll write a book about it and at least I've got exposure to the space via the book. I love the idea of Bitcoin. I love the idea of this open source, independent, apolitical money. I love the idea that, the internet is borderless. And the one thing that the internet had been missing is a borderless system of money, and the scalability of a borderless system of money. If you just think about that for a second, if you think, every national currency is limited by its borders, and, the internet needs a borderless system of money. And so you've just got something. And if you think about, the world's unbanked, still 2 to 3 billion unbanked people, but they're all going to have a smartphone by 2021, according to research by Sony Ericsson. 6 billion in a global population of 7 billion will have a smartphone by 2021. And so they'll be able, all you need to trade in the crypto markets is internet access. And a smartphone is, the way by which most of the world's population will experience the internet for the first time. And they'll, even if they're unbanked, even if they're financially excluded and they can't get a bank account in their own country, they still can download a wallet and they'll be in a position to receive cryptocurrency in exchange for their labor. And so, there's so much potential there, scalability. And, if you think about how, the money that got spent laying cables in the 80s and 90s, and then China just went straight to wireless and didn't bother laying the cables because it didn't need to. Cryptocurrency is a bit like that. There's just a scalability that excites me. So I think my new buzzword from this interview, as you've probably guessed, is scalability, because that's where you get quick growth.
Excellent. Okay, as we begin to wrap up the interview, Dominic, is there anything else you wish to talk about today?
Yeah, I'll talk about another big theme in that I'm thinking about a lot, and in fact, I've acted on this, is privacy. Um, the way the internet is set up, as it currently is, it's set up so that no privacy is the default. And if you want privacy, you've got to sort of add stuff. You've got to either pay for it, or you've got to put a VPN on your machine, or you've got to buy an encrypted email address, or whatever it is. And we don't realize this, but we have given away our privacy. And you know the line, if the internet is free, you're the product. And we are the product. And there's this new market that just didn't exist 25 years ago in personal data. And I'm doing stuff like the other day, I was in my house and I was going skiing the 2 days later. And I was saying to my daughter, which boots shall I take skiing with me? Shall I take my hiking boots, or shall I take my Timberlands? And we had a discussion about this. And I was going, yeah, my Timberlands look a bit old, but my hiking boots are a pain in the arse to take on and off. Silly, petty discussion. That night I get into bed and I'm just playing on my phone in bed before I go to sleep, which is a terrible thing to do and nobody should do it. And Amazon is selling me Timberland boots. And I'm like, how did it know that? And so, there's obviously something on my phone that's listening to the conversation. And yes, it could be coincidence, but it isn't, because there's so many people who've had similar experiences. And so we're being watched, and we don't know who's watching us. Is it companies trying to sell us stuff? Is it the government trying to nudge us? Is it nefarious actors? All these things. Now, like take Gmail, for example. I use Gmail. And let's say I write a letter to my lawyer. Now, that letter is confidential between me and my lawyer. And information that I tell my lawyer, I might not want to tell, I don't know, my accountant or my lover or my agent, or, whoever the other person is. And similarly, stuff that I tell my lover, I might not want to tell my lawyer. Or stuff that I tell my accountant, I might not want to tell my agent. So you supply different information to different people based on that relationship. Gmail knows everything. It knows everything I've said to every different person. And it is using that information in all sorts of different ways. Not only that, sometimes you draft an email, somebody's really pissed you off, say, and you draft an email to give them a bollocking, and then you thought, actually, do you know what? I better not send that email. So Gmail still knows what you've drafted. So Gmail knows stuff that you've thought but haven't said. It knows the darkest recesses of your mind. It knows your search history. Google knows your search history. It records it. So we've given so much private information about ourselves away, and we don't realize what we've given away. And I'm convinced that and people are waking up to what's happened, and the more kind of sophisticated operators are using VPNs, and maybe they're using Proton Mail instead of Gmail, and all these kind of things, gradually trying to wean themselves off the free internet. But I'm convinced that privacy, and we're seeing. Did you know, for example, that in the United States election, the Trump-Clinton election, in order to win votes, they had a company called Cambridge Analytica study all sorts of data. This is the Trump thing. And they targeted several key swing states, and they realized that they needed to win those key states, those swing states, if they were to win the election. And so, they realized that there were a lot of voters in these swing states that, a lot of people they always vote Republican, or they always vote Democrat. Now, you're not going to win that guy. The guy you're going to win is the guy who hasn't voted in the last couple of elections, or the guy that maybe votes Republican one time and Libertarian another time and Democrat, the swing voters. So they've found somehow the voting data on how people had voted, and they were able to draw up lists of people who hadn't voted, or, potential swing voters. And then they found that people who owned an American car, as opposed to, say, a Japanese or a German car, were more likely to vote Trump. So they did this thing where they targeted swing voters who owned American cars. Now, if you have own an American car, I suppose it's public knowledge because the American car is parked in front of your house and you see it in front of your driveway. But even so, it does involve some kind of, clever data research. And I thought how you voted was supposed to be private between you. You have the privacy of the ballot box, but clearly it isn't. So there's all sorts of invasions, and who'd have thought? The argument is if I'm not doing anything wrong, I've not got anything to hide. Well, no, you don't. But do you want your information being used to determine the outcome of a general election? And so, these kind of things are going on. And so I'm convinced that privacy is going to be a really strong narrative. And I think there's almost going to be a whole bull market in privacy going forward. Now, it's going to be a narrative that drives a bull market in tech. And we're going to see all sorts of privacy companies springing up that, whether it's VPNs or new kind of email protectors or privacy coins or whatever it is. And so I wanted to, a guy came to me who had a shell for a company and said, what can we do with this company? And I was saying, look, privacy is going to be a huge story going forward. On the one hand, I want to be investing money in privacy companies that enhance privacy in some way. And on the other hand, I want to be a vehicle for investors who maybe don't have the time to research specific tech companies, but are interested in the privacy narrative. How do I invest in privacy? Well, you buy our company. So that's what we've done. We've got this privacy holding company. It's like a sort of merchant bank for privacy, if you like, or a private equity privacy company. And we're listed on the CSE, the Canadian Securities Exchange, ticker symbol Cypherpunk, named Cypherpunk Holdings, ticker symbol HODL, HODL. And that's what we are. So we've set up this privacy company. And I'm pretty excited about that going forward. At the moment, we're just a few $1 million market cap trading at NAV. But going forward, I think this has got a huge, huge potential. I think there's a big story lying ahead.
Okay, well, thank you very much for your time today, Dominic. Much appreciated.
My pleasure. I'll talk to you soon.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?